Nifty is on the verge of 8750. Tata Steel is moving up smartly, approaching at a fresh 52-week high there. And on the mid-cap end of trade, your offshore companies, a Dolphin Offshore, a Barn Offshore, have started moving with considerable strength. But we're just one day past the budget. We haven't stopped analyzing it yet. We're getting in an FII view. Jonathan Schiessl of Ashburton, whose India equity fund has more than $100 million by way of investments, joins in with his views. Hi, Jonathan, and thanks so much for taking the time out and joining us. Now that the budget has cleared India of all tax-related uncertainty, whether it was the indirect tax provision on FPIs or the fear of long-term, short-term capital gains tax, what's the setup looking like for India now?
I think the budget, I guess the market's reacting on what the budget didn't contain as much as what it did contain. So, yeah, certainly from a foreign investor perspective, it looks very, quite positive actually, particularly the fiscal prudence side, and as you say, on just some of the clarifications from a tax perspective, also take away a background worry.
Okay, Jonathan, hi, good afternoon. For Indian market, what's been remarkable is that it's the domestic liquidity which has really led to this huge rally. And the foreign inflows have not yet started. The outflows have stopped, but inflows have not started. Is there a bit of a missed out feeling among your peers? I'm sure you would have been topping up, but what's your sense about this? FIIs missing out on this party?
Yeah, so I think if you look at the FII flows over the last couple of years, they've actually been quite disappointing with money coming into India. I think a lot of foreign money, if it's going into emerging markets at all, have been chasing those commodity-linked emerging markets like Brazil, Russia, et cetera, which had derated to such an extent, whereas India a couple of years back obviously did outperform. So I think, to our mind, that game's sort of quite long in the tooth. So we would expect, actually, following this budget, we'll see if there's an interest rate cut on February the 8th, but we would expect that actually some attention comes back to India. I guess from our perspective, it's probably rallied a little bit too quickly in the very short term. So you haven't got that valuation buffer, I guess, as some other markets might have. But I would think with certainly a very fiscally prudent budget, some of the reforms coming through, and obviously with hopefully in the next couple of quarters, the demonetization effect beginning to wear away, that definitely foreign money will start looking at India again in a major way.
Jonathan, did you participate in this near 10% up move that we've seen in the last 1 month?
Yeah, as I said, it did take us a bit by surprise. We were certainly nibbling in some of the mid-cap names in the midst of the demonetization sell-off. We did manage to pick up some fantastic stock, and obviously looking back at it now, it's like, why didn't we do more? So we have participated lower down. The only trade we've done in the last couple of weeks has been actually topping up some of the IT stocks where we were beginning to see some real value. Obviously, that's been all over the place in the last few days, but obviously they're rallying hard today. So there's some good value in those IT spaces, but broadly speaking, we're still mainly focused on the domestic stuff, but we haven't yet done anything major in the last few weeks in the sort of domestic counters.
Are you referring to Godrej Industries as the stock that you wish you would have participated more? I see that's part of your top holdings now. Have you topped up on this investment?
We topped up a few months back. It's been a core holding of ours for many years. It's obviously one of the few stocks where you can build a pretty decent valuation basis, but on the sum of the parts basis. You're almost getting a very well-positioned, one of the country's best agricultural businesses for nothing at current multiples. So we've liked it for a long time. We know the management team very well. It's been a core holding of ours. We're very happy with the position. It's already a big position for us. So yeah, it's nice to see the move on no apparent news. But yeah, it's nice to see that one.
Since most of our up move, at least most of the Indian market up move, is global in nature, do you think the global market, rally has some more legs to go from here on?
I guess I'm not sure the Indian market move is global in nature because as you pointed out earlier, it's mainly domestic money that's been pushing it up. I think globally, we're a bit concerned, if I'm honest, about levels of complacency again. clearly we're entering in a phase of increased political risk. Central bank, our central banks at your back. U.S. interest rates potentially could go higher if we do see this recovery in the U.S. sort of entrenching and the animal spirits, if you like, coming back. So, ultimately, if we get 3 rate rises, I'm not sure equity markets globally are pricing that in. So, there is a little bit of complacency creeping in.
Okay, you did say that you have been topping up on IT of late. You have, of course, your top 2 holdings are Infosys and HCL Tech. HCL Tech has done much better than Infosys, and it was there in the numbers as well. But the risk, Jonathan, here is that while we are looking at the valuation, is the earnings risk not being well recognized, especially the FY 18 or 19 risk, which might make valuations again a bit hazy. Your thoughts on that?
Yeah, so I mean, obviously, the two issues with IT you face is obviously the whole Trump issue and protectionism, but secondly, demand. And our view would be that actually a strengthening U.S. economy ultimately can fix some of the issues that these companies have had with revenue growth. Obviously lackluster IT spend in the developed world, and obviously if the US continues its recovery, if Europe, which the data looks pretty good coming out of Europe for the time being, so if the demand side can recover for a lot of these IT stocks, you could get, I'm not sure the street is pricing in, this recovery that we seem to be seeing in the global economy. The street seems to be mainly focused on political issues, which to our mind is slightly overstated.
So with domestic flows strong and the FI inflows once again, starting to come back into the Indian equities, what could be the extent of upside for our markets here?
Yeah, I think I've been on the program before saying we had previously thought that the main upside would be sort of back-ended of this year as the demonetization effects wore away and we understood the impact on earnings. Clearly, we're going through a sort of euphoric rise at the moment. I would struggle to find this index breaking through the prior sort of the 9,000 levels on the Nifty. It could go a little bit higher, but we've in the short term, I'm not sure with the growth outlook, still with the uncertainty on certain sectors, still with the political risk globally. And obviously, we've got the massive elections coming up within India itself, which could introduce an element of risk as well. So we wouldn't be thinking markets can grind much higher here, but they've obviously been on an absolute rip in the very short term.
Okay, Jonathan, I could be wrong, but I don't see Eicher Motors any longer in your top holdings. Have you pruned some of your exposure? It's given you multiple times returns, would that be right, or are you staying invested here?
No, we haven't shifted in that. That remains a core holding of ours. We were in India in early November. We met the management then, and they were saying even then that the impact from demonetization wasn't really coming through, and that's obviously been proven in the numbers. Clearly, what has hurt, though, is their commercial vehicle side of the business, and that's where we're expecting to see some sort of recovery in the period ahead.
Jonathan, any particular reason why you didn't top up on the banking stocks? HDFC Limited is one of the core holdings of your fund. So in the recent sell-off that we've seen post demonetization, you spoke about having added to your technology holdings. Why not the financial space?
Yeah, so we did actually add to IDFC Bank, which has been a fairly well, we've had it since it was obviously listed on the stock exchange, but we actually took money out of a couple of the private banks that we own shortly after demonetization in November, really on the basis we were concerned about margins and the impact, the hit to margins from banks, obviously having to pull in extra staff to deal with the queues outside their branches, as well as the simple fact that banks had sort of switched off from lending and were more focused on actually getting cash and depositing cash and actually getting cash back out into the economy. So, and we were also concerned about any news of perhaps issues with currency coming into branches in a manner which it shouldn't have done. So for us, we just de-risked the sector a little bit. If I'm honest, when I look at the share prices, that hasn't been the right call in the very short term. We still obviously own stocks in the sector, but we had shaved them. And I'm not sure the problems are behind us. Obviously, I guess one of the key disappointments were the government plans for recapitalising the PSU banks, and therefore that will probably mean that we have a growth headache still for a little bit longer. So the banks, certain ones do look interesting, but I think the bulk of them we would still be a little bit cautious on.
Okay, Jonathan, thanks a lot for your time today. Appreciate